Google's earnings were reported yesterday. The market is reacting to this by pushing the stock up. However, we should look beyond just this quarter and into the future. Is their business getting stronger? Is their moat getting wider? Let's check that out. We will begin by looking at my proprietary Moat score of Google. It will be rolled out to paid members of my Substack this year. And what we have here is a Moat score of 9.5 out of 10. Now that is a strong metric, and it's driven primarily by their excellent product lock-in. How can Google lock in clients? Simple. When you're a Google Cloud customer, you start to integrate different services alongside your Google server. You use their AIs, you use their Firebase, and other stuff. This is way easier than using a different provider. And when, for some reason, you want to switch because of price reasons, you are met with a crossroad. Should I do this migration process, which is very long and can go wrong at many points, and that is just to get a 20% discount? Definitely not worth for me. So we are looking for any weaknesses in the report made by Google here in terms of the product lock-in, as it's the first pillar of our Moat score. Are people not using search anymore? We have this. AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages. Did you hear that? Google was meant to be the dead company, left behind in the dust because of ChatGPT. Now it seems that search isn't dead. The interactions done with the AI overviews are useful to people. Why? Because you don't have to wait for an AI overview to load, unlike ChatGPT or Gemini. It's lightning fast. So people can access information faster than ChatGPT. Look at that. They also mentioned specifically that younger users prefer to use a combination of Circle to Search and Google Lens. Those are what they call offline inputs meeting the online world. Even children see that it's easier, so they do that. This data reinforces the rating of the product lock-in, given that it's currently being strengthened by the current strategic expansion of their services. Customers of Google, Salesforce, Singapore's bank, and Louis Vuitton are all building on their platform, driving the 35x in usage of Gemini this year. I mean, that kind of growth is just phenomenal. But that isn't just the number of users growing. The revenue and net income also grew, and quite a lot. As you can see here, what do we have here? Revenues grew up 14% year over year. This is a large company. As you can see, costs and expenses also grew 14%, but their net income grew by 19%. So you can see 5 percentage points difference. That is great. However, I think it's key to mention here that Google has announced a partnership with OpenAI. I'm wary of these kind of deals, as I recently saw many other people saying that these giant tech companies are artificially inflating their revenues because they want to show that AI is actually earning them money. That might be true, but what if it isn't? That kind of news can make my quality score, worse. The operation excellence of the company can be, driven downwards. Their, quality trajectory, which is already weak because of some quarterly swings, their cash efficiency could get lower because they are spending more on different partnerships. Well, we'll see. This could impact also their profitability and so their growth efficiency's excellent rating in the Moat score. But their other bet is what I like. Waymo is their way of saying, look, we are better than Tesla. We actually have a robotaxi network. While it's still losing money, as you can see on this chart here, it's just a step in getting to as many people as possible. We saw that with Uber. Losing money, then not. Duolingo, the same. I believe that Waymo has the potential to lead in this robotaxi race. In conclusion, after reviewing the new data against the key pillars of my Moat score, as well as the quality score, this was a great quarter. The Moat score remains a 9.5 out of 10, and the quality score is a 6.6 out of 10, which is good. The data reinforces the strength of the product and financial lock-in, with the OpenAI partnership being the only new risk to monitor. Now hear this. I write analysis of companies on my Substack, and on Saturday I will be releasing my monthly gigantic article. Paid subscribers get the full story. You get my detailed research notes and my complete discounted cash flow valuations, showing what price I'm willing to buy at. The full Moat score dashboard you saw a preview of here is the next evolution of this work, and paid subscribers will be the first to get access when it rolls out later this year. By subscribing now, you become a founding member who is directly supporting the development of this tool. If you're serious about long-term systematic investing, click the link in the description and subscribe to the Monopolistic Investor. Thanks for watching. This isn't financial advice.